Hello, everyone. Today on the final bar, my guest is Xenia Taoubina from XT Financial Services. She'll talk to us about the Nasdaq, focusing on a shorter-term time frame. We'll see what her toolkit is telling her about key levels to watch in one of the most watched indexes of them all right now, as we see continued rotation away from the Nasdaq overall, but holding up just fine today with the S&P and the Nasdaq both rallying into the close. The S&P accelerating to the upside, looks to be closing just above 4,200. So a nice resilient follow through. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the markets themselves and the message that the markets provide. I've often been told and have repeated the lessons from my own mentors that if you want to look at anything, one thing to try to make sense of the markets, look at a chart and focus on the trend. Your number one question you should be answering or attempting to answer is where are the trends, right? What's working and what isn't? And I would argue charts are the way that you can determine that. That's the way you can anticipate what may be coming next. And most importantly, it's the way you can plan for unusual occurrences, sort of the fat tails, right? The unusual 5 or 6 standard deviation moves that we often have in investing. Nice rally to finish the day today with the last hour of trading accelerating to the upside, the S&P going higher. We're going to look at the chart of the S&P and see what that means for the overall trend and update on some of the key levels we've been reviewing recently. Before we get to that, though, I just want to remind you of the upcoming schedule. So today, excited to talk to Xenia Taoubina here shortly. Tomorrow, or actually, sorry, next week on Tuesday, May 11th, we have Jay Soloff. On Wednesday, May 12th, we have Bob Lang. On Thursday, May 13th, we have Chris Brecher from Brecher Trading. Jay and Bob, by the way, both options experts, so it'll be very interesting to get their take. Really enjoyed talking with Sean McLaughlin yesterday. If you missed that discussion, he sort of laid out an options trade based on the Nasdaq and how to think about it. So actually, also very interested to hear Xenia's take relative to what we talked about yesterday with some of the overall patterns on the Nasdaq. Continuing on today, let's talk about the markets and how they've played out. So today, by the end of the day, the S&P actually finished to the upside. About an hour ago, as I was starting to prepare for the show, it felt like more of a wash. You had that what has become a very common pattern: the Dow up, the Nasdaq down, and the S&P there in the middle. However, what's happened is a lot of that change there going into the close. A nice rally with the S&P moving higher. And so the question now is what's next? We'll get to the chart of the S&P here in a moment, but it finished up 0.8%, about the same as the Nasdaq 100. Mid caps and small caps up as well, but lagged behind just a little bit. Looking at other markets very quickly, interest rates drifted lower through the course of the day with the 10-year yield down about 1.5%. From yesterday. That's if you're taking the TNX and looking at the change there, but overall down to around 156. The dollar down as well, about 0.5%. Precious metals continuing to move to the upside. We're going to talk about the chart of gold here in a little bit, which is one of the more compelling long-term charts, to be honest with you. This is an asset class and one particular part of the commodity space that really had not been participating with the upside that other commodities have seen, but a nice move to the upside today that really continues the bounce off of a really clear support level, I would say, from gold. Energy, by the way, oil prices down a bit using the USO. Cryptocurrencies down a little bit, but overall mixed depending on where you look. We actually have a segment later today called Crypto Corner, where we occasionally look at the crypto space in a little more detail, update on some of the longer term trends and how the short term movements relate to that. So we're going to get a little bit into Bitcoin and Ethereum here a little bit later in today's show. Let's look at a chart of the S&P 500, and it fluctuated quite a bit going into the close. All of a sudden, we went from my general thesis of 4120 is in play. Let's see when it hits. Does it hit today or tomorrow? So all of a sudden, this nice rally into the close. The S&P getting back above 4,200. closing above it for the second time ever and threatening to make a new closing high, which it did not quite do, but basically, really got back into the range of that high day from about a week or so ago. So overall, again, I think we're still in this range. Today's bounce aside, I still see lots of challenges, especially in the growth space. I think the distribution we've seen in a lot of very growthy names today, this week, and even leading up to this week is quite a headwind for the market to go materially higher from here. However, it's all about the trend, and as we've mentioned a number of times in recent weeks, until we could stop making higher highs and higher lows, the trend is up. By definition, the trend remains higher. We have made a new all-time high about a week ago. We came close to getting back to that, to similar levels today, but did not quite do it. And overall, until we break our most recent swing low, which at this point would be around 41.20, that's the low from mid-April, and now the low from Tuesday's trading, until we break that level, overall, the short-term trend, the tactical trend, remains positive. And so that's worth remembering. If and when we do break 41.20, I think 4,000 is the next line in the sand. That's the next more long-term structural level. Breaking the 50-day would be a significant one. We've tried to do that a number of times in the last 6 months and have failed on each time. We've not closed 2 consecutive days below the 50-day. We closed once below it, and that was about it. Other than that, it's been trading below and popping right back up. So overall, trend is up until proven otherwise, but I would not be surprised if it is proven otherwise here in the near future. In terms of sector movements, financials continue to have a strong showing with the XL up 1.5%. We'll talk a little bit more about that later in the show as well. One of our 3 and 3 charts is going to feature the financial sector. We talked about regional banks, actually, one of the 3 and 3 charts yesterday or the day before, if I remember right. When I'm screening for stocks making new swing highs, making new swing lows, I keep getting a lot of financials in there, and I think that tells you a little bit about the characteristics of that market. Second was consumer staples. Now, you had some names that had quite a bounce on there. Something like Kellogg comes to mind with a nice gap move higher that was up about 7%, really changing the characteristics of this chart, going from a bounce, and granted was sort of a bullish trend and arguably sort of a bull flag pattern. We have a nice run and then sort of a consolidation phase for about a month, a little bit lower highs, a little bit lower lows. That's resolving to the upside, but overall a nice resolution of that pattern moving up. And that would indicate a potential return to previous all-time highs, if not a little bit further, depending on how you measure that pattern. That's about where it would look from a technical perspective. That would make sense. Then you really have to question whether the stock can get above those long-term highs and continue push to the upside. But that is why consumer staples were the second top sector, followed by communication services and technology. And again, things changed a bit going into the close as things rallied and things adjusted. But that's where we finished out. All 11 S&P sectors appear to be closing in the green today. The least performer, the worst performers, if you will, healthcare, consumer discretionary, real estate. And real estate's an interesting one. It had been one of the best performers. The long-term trend, very, very strong. And all of a sudden, quite a change here in the last week or so, sort of reverting back to the upside. Looking very quickly at some industry group data, and then we will look back and try to break down a little bit more about some of the charts that I've been watching. But when I'm looking at the industry groups, the top ranked groups in materials, 3 of the top, actually the top 3 out of the 106 odd industry groups that we track, all in the materials sector: gold miners and miners at the top, followed by steel stocks. You have brewers within consumer staples as well. So that's a group that actually did pretty well today. On the downside, what actually underperformed, it's the travel trade, travel and tourism down almost 5%, gambling stocks, recreational services. Renewable energy equipment is a really interesting one. For the longest time, those were the stocks that were at the top of the list. And this is a mix. This group, we actually bucket in technology, and it's sort of a mishmash of things, but it's all the solar stocks like First Solar, SolarEdge types of names are in there. You can see SolarEdge is actually very Peloton-like chart with the head and shoulders top. You might actually call this a complex head and shoulders with a head and then a number of shoulders on both sides. But the real key is that neckline, which it is certainly broken and indicates higher potential of a further downside there. It also has things like Enphase would be in that group. which is another one. This looks a lot like the ARK Innovation Fund, to be honest, with the sell-off there February into March, the consolidation phase of lower highs and higher lows, sort of settling into that range, and then breaking down and now going back below the 200-day moving average. Plug Power is in this one. This, for at a time not too long ago, back here, was the number one ranked stock in our scooter rankings in the mid cap space. How it has fallen now in the 7th percentile out of 100% of the mid cap space. This clearly continuing to be in a downtrend. Again, charts like this can be tempting when you get to an oversold condition. But in general, one thing I learned at some point in my career was, never confuse the bottom of the page with support. Price usually goes down for a reason. So it feels like you could be getting a bargain all along the way here. I found charts going down are going down. And what you want to look for is when they stop going down, or at the very least, when you get some indication of downside exhaustion, right? Some sort of bullish divergence from momentum, which you've not seen. The relative strength turning higher, which would tell you that other things are selling off even more. You're not seeing that, of course. And now we have a chart that's broken down through the 200-day, bouncing above or bouncing back up to it, and now rotating lower. And charts like this, I certainly feel have a high likelihood of continuing to go lower. The path of least resistance appears to be down. Let's continue on after the break. We'll take a quick commercial break. Back with Xenia Taoubina. We'll see you in a minute. To the final bar. This is Dave Keller here at StockCharts.com. So appreciate you joining us every weekday after the close to focus on the markets using the power of charting, using technical analysis, technical indicators, momentum investing, trend following, investor sentiment and psychology, all the ways that we can quantify those emotional drivers of buy and sell decisions. As a reminder, we love to hear from you, particularly questions that are coming up as you are analyzing your own charts. Let us know how we can help you. Shoot us an email, thefinalbar@stockcharts.com. You can look us up on Twitter at FinalBarSCTV, or on our YouTube channel. Just put a comment below the video that you're watching. No questions are out of bounds. We'll do our best to answer any questions on technical analysis, on the markets, on particular charts or tickers. Whatever it is, we're happy to help you out. Also, as a reminder, the new StockCharts TV on demand is out. It is really well done. I'm super proud of the team and all the work that they put in to bring all of our great content to life, featuring our fantastic hosts, all the guests that we have, like Xenia coming up here in a moment. So as a reminder, go to stockchartstv.com, use your email, set up a free account, or you can look us up on all the app stores. Just search for StockCharts TV on demand. I want to welcome on my guest joining us once again on the show, Xenia Taoubina. Xenia is the founder of XT Financial Services. And Xenia, I've mentioned you coming to the show a couple of days leading up to this, and I always mention that I love talking to people who look at different asset classes or different timeframes, or at the very least different charts than I do. And you fit that description. You're a little more short term than I am, and you're looking at other things like wave counts and others that I don't. So I appreciate you coming on, and welcome back to the show.
Great to be here, Dave. It's been a good 11 months since I was last on the show. And I remember at the time it was June 11th and Nasdaq was going down heavily. And I was arguing for the correction to be a short-lived, which sure came to be. And now I think we're approaching another turning point. So thank you for having me at this crucial time. So while normally my approach is to go top down with larger degree charts first, I chose to go with the hourly chart because this is a follow-up on the setup that I've publicly shared in March when Nasdaq was plumbing the depths. And the upside setup that I shared did pan out, or to a large degree. And what we have here is a minor new high and a consolidation around prior high. So the April high was the minor new all-time high, and consolidation that is so far is holding over the March high that's marked with Roman numeral 1. The way I'm looking at this is the structure is likely to be topping, but ideally before it tops, it will produce a minor new high into the blue box marked with the Roman numeral 5. And from the look of it, it's probably going to be the lower portion of that blue box rather than the upper portion. This should be completing the rally of the March low. And not only is it in itself significant, but it has significant implications for the larger degree pattern that we're going to discuss on the next page.
Very interesting. So Xenia, so to be clear, so what I'm seeing is out of the lows here on the left side of the chart, it's sort of the 1, 2, 3 there, 4, and then we're seeing one more wave up to 5, and then that would be the, at least on this time frame, the top that you would envision. Is that right?
Correct. And that perspective remains for as long as the March high, which is 13,297, is not breached. Right. It may see a minor test, and if it's a minor test, we could still see that slightly higher high, but it begins to get shaky beyond that. Okay. And any sustained break below it would suggest that rally completed without that higher high. And
how does that line up with a little more of the long-term view here?
Sure. So long-term, what we have in Nasdaq is Nasdaq led the rally, and it front ran a lot of the gains that Russell in particular is yet catching up to. So while small caps were strongly delivering on the bullish pattern into the start of the year, Nasdaq is really just doing residual squiggles, as I call them. And what I have here is the low that we had, I want to say it was in September of last year. So the one marked was number 4. Yeah. That quite possibly was the penultimate set up the penultimate pullback, setting up the final rally. So the way I'm looking at this is we're now in the final segment of what quite likely is the final rally of the 2020 lows. So that blue box that you see on this chart is the same blue box that we just looked at on the prior chart. So just one more higher high. And my expectation is that that should set up, at the very minimum, a meaningful pullback to the vicinity of March lows. So that would be the yellow box marked was old 4. And quite possibly that will set up the top of the entire rally off of the 2020 lows.
Very interesting.
Yeah.
So the first chart, by the way, that's this sort of smaller zoomed in pattern that we saw, was sort of this last little bit there. I get it.
Correct. So just a little bit higher, and then we should be setting up for a meaningful pullback, retracing all of the rally of the March lows, and quite possibly a whole lot more to the downside. And the way I look at it on the way down is that once the March high, which was the 13,297 level that I mentioned before, once that is broken, there is really not much not much in terms of support down to the vicinity of the March low. So that's 13,000, or that's 12,200. And that's where we have the first confluence of support. We have, firstly, the prior swing low. We have the 200-day moving average, which is the dark blue line that you see on my chart. And we have the prior swing high, so retest of that zone from above. So my expectation is that we ideally will get that one more high and then reverse all of the gains since the March low. And beyond that, we have a couple of supports. We have a broken long-term channel, what used to be resistance and is now support. That would be the diagonal line that starts at the 2020 low and rises, 2020 high. So that's a long-term 2020, the February 2020 high. Unfortunately, I can't control the mouse, so I can't point it out.
Sorry, I'm fumbling trying to follow along, but forgive me, viewers. I'm for doing what I can.
So anyway, so there's some support between 12,200 down to 10,600. So that's the yellow box. And there are various sources of that support. And below 10,600, we likely have a top of the entire rally off of the 2020 lows. So it much will depend on how the decline that begins following that higher high proceeds, and whether it's able to back and fill into that yellow support zone, or if we get a big swoosh that goes towards the bottom of that support zone right away.
Xenia, we have to wrap up. This was really, really helpful. As usual, you're providing a lot of specifics and particular levels to keep in mind. I hope people paid attention to the levels you talked about, because you had a great pitch and a great call last June, and it's a pleasure to have you back today. Thanks for joining us.
Thank you so much, David.
That's Xenia Taoubina. Xenia is the founder of XT Financial Services. As you can see, a very different methodology from my own. And as I've mentioned, a couple days leading up to her guest appearance today, I found so much value over the years talking with people who use things like Elliott Wave that I've learned and that I've studied, but are not something I use day to day. And I find talking with people like Xenia, you have so much to learn from people using different disciplines, and really interesting how her comments of one more leg higher and then potential for downside lines up with relatively bearish discussion with Sean McLaughlin yesterday. So the signs are lining up pretty negative overall, it appears, for the Nasdaq. Let's continue on today. Our next segment is called Crypto Corner. What we like to do is occasionally look at cryptocurrencies and focus on some of the message there. We have a little bit of time to dig into it today. And as you probably know, I occasionally will bring up Bitcoin and talk about it because I think that there are opportunities there more and more as it becomes more mainstream to think about how it fits into a larger investment process. And certainly as Bitcoin has become more and more profitable for myself and many others, you've sort of mentally pushed it aside and focused on things that you're more experienced with. But I think at this point, it's become widespread enough and the movements are real and legitimate enough that at the very least, you need to see how it relates to other asset classes. Because I think the jury is still out on whether something like Bitcoin is a risk on or risk off measure. Is it a safe haven? Is it a way to speculate? Is it all of the above? How does it relate to other things like gold and the dollar? Hopefully in a short segment today, we have a chance to tease out some of those concepts. So, what's interesting when you look at the chart of Bitcoin, and we're looking at the last year, which is a lifetime in Bitcoin terms, probably. But when we're looking at this, especially year to date, I'm struck by the fact that we started 2021 with Bitcoin, around 30,000, we'll call it, is where it finished the end of December. So at this point, we've doubled. At some point, we've pulled back a little bit, currently around 56,000, but overall, still very much elevated from where it started the year. So compared to any other asset class, it's been a dramatic outperformer in terms of just the general percent returns that you've seen. What I also am struck by, though, is just the general pattern of the price. If you get away from the flickering ticks, the short-term movements in Bitcoin, and just look at the general trend, you can see that on this time frame, in general, it has been just a nice, consistent uptrend for much of the last 6 months, right? If you ignore April and go before that, just this nice, consistent pattern, higher highs, higher lows. The pullbacks continue to be higher. We had a couple a pullback there, especially in March, back to the 50-day before resolving and making new all-time highs and really moving above 60,000 for a short while. That, however, has changed, and now I would argue you have sort of this broadening pattern, right? You have higher highs from March to April. You have lower lows from March to April, so it's really broadening out. And at this point, we're really in the median. We're at the middle of that range. If you take a line and just look at where that middle of that pattern, taking this the higher highs and lower lows, you're literally right in the middle. So at this point, it really represents equilibrium. Bitcoin really hasn't changed from mid-February to where it's at today. Now, this is a huge swing from 48,000 up to 65,000. So it's quite a range that we're dealing with. But overall, directionally, it has gone from a long-term appreciation pattern to a consolidation pattern. I think the real question is, what is the next move? Does this resolve to the upside? Does it break to new highs and indicate more of a longer appreciation, sort of the next leg up, or does it go down? And I would say, if you look back at the history of Bitcoin, what I've seen is there will be a huge change in valuation, and then it sort of settles in. This is when everyone sort of mentally gets comfortable with this new range. I would think, based on my experience and understanding with it, I would not be surprised to see this resolve higher. But from a technical perspective, I'm going to want to see a little more accumulation than what we've seen up until now. You can see, by the way, the RSI is almost exactly at 50, which is the definition of the absence of momentum. It's the definition of a trendless market. Now, what's interesting, we actually featured this as one of our 3-in-3 charts yesterday. If you look at Bitcoin, which is here in black, and then look at the GBTC, which is the Bitcoin Investment Trust, the Grayscale Trust, you can see that while Bitcoin has been up significantly, the GBTC is essentially flat for the year. And that's one of the big challenges, right? Besides having a direct investment in Bitcoin, which obviously many individuals and others have, institutions certainly have started to do. In terms of accessibility through ETFs, that's still not something that's out there and widely available here in the US. And so as a result, you're left to look at something like the GBTC, and that trades at a premium or a discount to the underlying assets, right? So at this point, GBTC is actually trading at a steep double-digit discount to the actual value of what it should be trading at, given the value of what they're holding. And so you're not directly buying. A lot of times, if you expect to buy the GBTC and get the Bitcoin return profile, you're actually not getting it. It reminds me a lot of the USO and the crude oil prices, or the UUP and the dollar. In the short term, it's going to be very, very similar, but over the long term, it gets more and more disconnected because of some of those challenges related to it. Finally, and then before we really have to wrap, is Ethereum. So if you look at the chart of Bitcoin, how I mentioned it had a huge rally and then a consolidation, look how Ethereum looks nothing like that over the last year. Ethereum has actually just continued relatively unabated, although it did have this consolidation pattern in February to March. You can see from there it resolved to the upside, and then it's continued to make higher highs and higher lows. At the bottom, we're looking at the relative strength of Ethereum versus Bitcoin, and you can see that it's been outperforming, especially last year for sure, year to date, absolutely, but in the last 6 weeks, definitely. That's why you're starting to hear a little bit more about Ethereum if you'd not been hearing before that. And that's why I think as we go on, as this space continues to evolve, we will hear not just about Bitcoin, but it's going to behoove you to think about some of the other coins as well. By the way, my friend and fellow contributor, Dave Landry, has spent more time thinking of all the other coins that I did not mention, much more than I will ever spend time on. So if you look at his work, Dave Landry's posts on StockCharts, you'll find a lot more about cryptocurrencies, especially the altcoins, the less liquid ones. Also, you can go to stockcharts.com/crypto. We have about 150 to 160 coins listed on the system at this point. We're always happy to add more if you need, but check them out if you are looking for the price data. We need to wrap the show. Go to the 3 charts. 3 minutes. Here we go. It's going to be quick. Chart number one is the GLD, looking at gold. I was actually talking to one of my former Fidelity colleagues earlier today. Had a really good time catching up. And we were talking about gold and just the inflation that is evident, sort of the specter of rising inflation. And the reason why you can say from a technical perspective you haven't seen this, because gold prices haven't been going higher until about the last month or so. We talked about this Fibonacci support level, the June 2020 lows. We hit that on the GLD and rotated higher. I continue to see strength in gold. I certainly think that indicates concerns for inflation that will continue to build, but that's a chart. If you've been ignoring it, I would stop ignoring it. Chart number two is the financial sector, the XLF, making another new all-time high today. When I'm screening for stocks that are making new highs, I'm finding a lot of charts within the financial sector that continue to come up on that screen. At the bottom, this is the ratio of financials versus technology, making a new 12-month relative high today. Finally, what's not working? The ARK Innovation Fund. We talked about ARKK and some of the weaknesses. We've talked in a little bit of depth at times about the rotation from accumulation to consolidation. And now I would argue distribution. Today's sell-off firmly puts the ARKK out of this consolidation pattern, breaking down through the lower end of that, and also closing below its 200-day moving average for the first time since about a year ago. So overall, relatively underperforming, weak technical profile, and certainly something I would wait to find accumulation before I would get back into that. That's our show for today. I want to thank you all so much for joining us today. A special thank you to Xenia Taoubina joining us and sharing her thoughts on the Nasdaq. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.